Hey everyone, and welcome back to the channel. Just have the gold 4-hour chart open here, and we're just gonna jump in and have a bit of a detailed look as to what exactly is going on. It's been a while and gold has just been slotted in the same price range for quite a while. So let's try figure out what exactly it's trying to do so that we can plan our trades and see what the best plan of action can be. So there are a couple of scenarios that are looking pretty likely, so we're just gonna go through all of the scenarios. There's one bullish scenario and two bearish scenarios, actually, not one. So let's just take the two of them. Let's just go through the bullish scenario first. Bullish scenario is pretty straightforward in that sense. Bullish scenario is probably showing that the correction ended here. An ABC, which was actually not just an ABC, it was a WXY correction that ended over here, and this is actually an impulse that has already begun. This is the first one starting up. This is its corrective, and the third one will begin once this corrective ends. So if that was the case, we would be looking at the price playing out maybe something like this is 1, this is 2, this is 3, 4, 5. Sorry about that. So, something like this. This is your bullish case scenario, where the correction has actually ended here. Your first impulse has begun and ended here, and this is the second wave coming. If we're looking at playing this scenario, let's just zoom in on this area because this becomes the area of interest. We just pull our Fibonacci tool out, and as you can see, price is kind of playing at around the 50% mark. Wave 2 typically does 61.8% off wave 1. So we have to, kind of expect the price to come into this region here. And we need to see a reversal in this zone and a push upwards for this to kind of confirm. A complete confirmation would be if price starts trading above this level. So for people who are more inclined to take the bullish view, you can take a bit of a trade here, especially if you see a reversal of price from this area. So if you've gone into this zone here and then you kind of knock in, you can look at taking a trade in this zone, keeping this bottom, which gets formed as a stop loss. Or you can, if you really want to be safe and keep a large stop loss, this is the absolute stop loss here. And of course, if this wave has actually begun, the targets are pretty huge. So, you can hold on tight. And once the all-time high is crossed, you can start trailing it. And we can see where the price eventually ends up. So that's the bullish case scenario. Now let's check out the other two. So the other two scenarios are unfortunately bearish, and they go something like this. If we take the channel here and draw it, You can see price is playing in this declining channel. As long as it's in this, the correction, if you're looking at a bearish outlook, could be valid. So the first scenario is that we're building an ABC corrective, where your A wave is here, B wave is here, and your C wave is looking to end here and is still in the midst of finishing. And I say this because we've got your A wave and your B wave, and we've got what could possibly be an impulse heading down in the form of a C wave, because you've got your first wave here, your second wave here, your third wave here, and your fourth wave has finished here, and your fifth wave is pending for a final downfall here. So, sorry. The reason I say that this is still possible is because this still maintains the form of an impulse by the Elliott Wave rules. The fourth wave has not overlapped with the first wave at all. This is looking... I'm not of the opinion that this is the most likely scenario. I feel the next one is, if we're looking at a bearish one, which we're going to go by, but still, you can't rule this scenario out. It is possible that the fourth wave has indeed ended here or is getting a bit complex, and the fifth wave down is starting or has started already, and that's going to go give you a target of 3,700 to 3,800, somewhere in this region here. And for this scenario to be invalid, we need an overlap with wave 1 over here. So if the price crosses 5,016, this scenario is out of the window, and we are headed up in the form of wave 3. Yeah, and we're headed up in the form of wave 3 if this overlap happens. You can also look for more confirmations, in the sense, of course, if this gets crossed, you've already started, you've got a good chance that wave 3 has begun. The overlap happens, it breaks out of this channel, all very, very positive. So this is the option. If this count is still working, is where we come to the bottom of the channel, bottom out around 3,700, and then, you know, make our way. Something like this. Or if price actually decides to go up, break the stop loss, something like this. So this is what we're looking at if this pattern is negated. And this is what we're looking at if this pattern is actually playing out as a actual ABC, with A finishing here, B finishing here, and C coming down in 1, 2, 3, 4, and 5. Sorry about the drawings, but I imagine this helps with the count. Now, the very last pattern that we're looking at is a bit of a complex correction. It's where we're, again, the channel still holds true in this pattern for that. Although we don't need to go to the bottom of the channel. This would be a complex correction of a W, X, Y, X, Z. Now, in this scenario, the Z wave does not have to come down all the way here. It can, it does not have to come down all the way here. It can bottom out around 4,100 to 4,200 as well, before making its way up and breaking past. For this scenario to be kind of negated, it needs to start trading above this level here, and ideally break out of the channel. This channel is really important. The minute the price starts trading above this channel, you know that the price is at least going to the all-time high. If not above, you can easily take a long trade, keeping the last swing low as a stop loss for the all-time high to be taken out, or even to much higher. You can keep trailing your longs once that happens. But at the moment, I am more inclined to lean, if we're going bearish, towards this pattern where we can see the price coming in at least to 4,100 to 4,200 levels. It could go lower. There's no rule stating that it can't go here. But I believe 4,100 to 4,200 is a good area for it to bottom out as well. So I'm more inclined towards this pattern simply because of the way this entire corrective is playing out. It would be very unlikely if this was just playing out in the C wave as a 1, 2, 3, 4, and then a 5. This seems more like a complex correction with an X wave involved. Which is why I'm more inclined to think this is what it is. So we're just gonna have to kind of wait and watch, but we need to keep all these different scenarios in mind so that we're not, taken aback when price moves in a particular way. Judging by the state of the correction and where we are on the overall chart, you guys got to remember that the bigger game in gold is the long game. Even if we do get another dip to 3,700, 3,800, or even 4,200, we want to look at playing the long side, because that's the confirmed side, because when a bottom does form, we know that this top's going to be taken out and the price is going to push much higher up. So that's what we want to be ready for. That's what we want to aim for. So we got to keep all these things in mind, and we have to act when we see the price moving in a particular direction. It shouldn't be that, you've got yourself set in a bearish mindset, and then you see that the price is breaking, the top here, but you're too frozen in your bearish mindset to switch positions and to just go long, because that's going to be the move that we want to try and catch. Personally, I am sitting out of this last down leg since the chart is not clean. There's too many options. Whenever there's too many options, I tend to just wait on the sideline until I have some clarity or a confirmation of what actually is happening. So I'm going to be waiting on the sideline and waiting to go long so that we can catch this longer bullish uptrend and ride the price higher up. Leave your comments down. If you guys have any questions, please feel free to leave a comment, or even check out the description of the video to join our community. We've got a really supportive group, and a lot of us share our ideas and our counts there. So if you want to join, it's free to join. It's called Investor Edge Club. It's on School. You can check us out, join the community. It's a really supportive and fun environment. So hope to see you guys there. Otherwise, good luck.